Let's also welcome Sonam Udasi, Senior Fund Manager at Tata Asset Management, on the show now. Sonam, afternoon, and thanks so much for joining in. What have you made of the earnings season so far? What were the key hits, the key misses for you, and the takeaways for FY23 and FY24?
So I think the result season is still on. So far, early trends suggest that banking sector is doing well. PPOP growth is starting to come back, so that's a relief. But yet have to see. Valuations are within long-term comfort zone, so that's also helping the sector really. Within consumer, slowly input cost pressures are abating, so that's something to watch out for this quarter. Not all results, we'll have the result season really peaking somewhere in the mid of this month, so we'll come to know there. But from an FY24 perspective, key thing would be, see, FY23 second half will be the input cost pressures will abate, and therefore earnings will get more support, in my opinion. But I think FY24 we'll have to watch out for how the commodity again starts to behave. Geopolitical situation is still very dicey, if I may say so.
Okay, geopolitical situation is still a little dicey. Sonam, in your opinion, the PSU bank space is seeing a great degree of enthusiasm, excitement. Is it just a rotation from private banks into PSU, and we've seen that happen within sectors, intra-sectors? Is that what is going on here?
Quite possible, for the simple reason that there is a huge valuation discount within the PSUs and private sector. PSUs, I think, barring SBI and BOB, most of them are below book in terms of pure valuations. So naturally, if the tailwind is looking good for the sector, then generally people tend to take on more risk. That being said, I think the sustainability of this will be, we'll come to know when the credit growth really picks up. If it becomes broad-based, then it will sustain and become stronger. Otherwise, it's just just a fad for some more time.
But I was just looking at your holding, Sonam, and I think you have mostly private sector banks in here. I can see ICICI in there, HDFC Bank in there. Do you all own any PSU banks as of now?
So we own SBI, and
okay.
We also
will you look at adding the other names? Like, as you said, valuation-wise is looking rather attractive. So are you all giving it a thought? We'll have to track your fact sheet to check whether or not you'll get it the next time around. But as you said, you have SBI. I can see a lot of private sector banks in there. Do you believe that, you would be giving them a look, given that some of them are still trading at very, very cheap valuations?
So as investment managers, we'll continue to debate and, look at cycles. But interestingly, a lot of the smaller private sector banks were much cheaper even a month back. And some of them were at 1 or below 1 as well. So that gave us an opportunity to go there first. That was an easier call to take. The difficult call is therefore now, do you want to go and back, government sector banks, considering where interest rate scenario is? So as I said in my opening statement, if the credit cycle becomes stronger and more broader, then this space has more legs. And as investment managers, we'll have to look at more structurally positively for the entire sector. But for that, really right now what we are seeing in terms of credit growth is some bits of working capital inflation-led demand, some bit of breadth of demand that is picking up. Retail is doing quite well, but really capex led, we have yet to sort of see that for most banks. So we'll need to watch out for that. And PSUs operate very well on the corporate side. So that's where the call will become.
You own in the consumer fund. You own Metro Brands as well. Is that a recent addition, Sonam? or you wanted?
So I think
Yeah.
we have been with part of that company since the IPO, and we have added post the IPO. And as you get more comfort and more data on how they are performing and how the quarter was, I think from that perspective we have just sort of added to that holding post the IPO.
It's a rocket. It's been a rocket for you since the IPO, right? In the consumer fund, single-handedly. One just only hopes you own enough of it.
So actually, see, sometimes owning it's both a boon and a bane,
Yeah.
But the fact of the matter that space itself is doing quite well. The footwear segment is doing quite well, and data is pretty good. But I think since you mentioned consumer, even some of the smaller QSR names have done quite better than the large ones. So I think within segments things are changing very very fast. Uh, so from our perspective, we are actually now more inclined to look at how is the input cost pressure going to be over the next quarter, over the next 2 quarters, and then take a call whether this then volume momentum will sustain or it's just Diwali driven.
Any worrying signs of consumption, at least in the stocks that you hold, the companies that you talk to? Are you worried about consumption faltering?
So right now, nothing. Right now, in most channel checks across the board are suggesting strength continuing even as we speak. Be it autos, be it footwear, be it clothing, and you name it, even building products, sanitary ware, etc. The volume number, I think companies are quite gung ho about. As investors, from a shorter term, we do understand some of it may be pent up. So I think the bigger question for investors would be how from where this will sustain from December onwards, and if that sustains even a little bit. Generally, I've seen in my experience that consumer sector generally is more secular, barring 1 or 2 quarters. It sort of tends to come back meaningfully. We are after all 130 billion janta, and we consume, and every quarter or 2 quarters, I think one or the other segments come back very very strongly. So I think for us really, where is the input cost pressure headed, and therefore it'll give more legs to the volume momentum.
Well, Sonam, final question from my end then. What about ITC? I'm looking at your flexi cap fund and you have a large holding in there, close to around 4.2% ITC. I don't know how many fund managers would have given it a good amount of allocation in the last 1 year or so. But what's your view on the stock right now? And have you all been adding on to this position, or is this a relatively older position?
So this is a very relatively older position. We have taken the brunt of it also, while it's outperformed, but we continue to be within this space. We continue to like this relatively, from an input cost, pressure point of view, from a volume momentum point of view, and valuations of course continue to be favorable.